Can I do a video on risk management? Well, I've done it in the past. I mean, I've just kind of covered it, but I'll go through that again. Okay, so question is from Kim Jo. Basically, a video on risk management. I'll go through how I manage risk because at the end of the day, it doesn't matter how good your research is. Nobody is perfect, right? People always take L's. It's investing, right? Sometimes investing, you can't win all the time. So you have to make sure that when you do lose, you don't get wrecked and you stay in business. You stay to play again, right? So you have to have a long-term perspective. So what I do is I take my portfolio and as I mentioned, I have no Bitcoin. I might have Bitcoin in the future, but for now, I have no Bitcoin, right? I'm basically all in on Ethereum. So let's say I have 100 grand. Everything is in Ethereum, right? Because I think Ethereum is going to surpass Bitcoin in market cap and value because Ethereum is building the future of the internet. Bitcoin is store value, right? So basically digital gold versus the next internet. I'm a tech guy. I pick the next internet over digital gold, right? Now I'm all in ETH and something I think will have value long term and be better than Bitcoin. And now when I invest, I ask myself this: is this a trade or is this an investment? And I think people forget that a trade is something you're speculating on, meaning that you don't really care about the fundamentals. You're just trading it based on technical analysis. So if something is a trade, I only put 1% of my portfolio in that trade, right? So most traders will tell you 1 to 2%, but just to keep things safe, 1%. Right? So meaning that if you have $100,000, only 1 grand is going into that trade. Where people get wrecked, where newbies get wrecked, is they put 50% into one trade because they're trying to make money very fast. Then that trade, as will always happen, right? Maybe not now, but eventually will go against you and you get wrecked, right? But basically, if you're doing trades, if you're doing degen, if you're just finding these projects that have no code or whatever, only 1%, right? So 1 grand out of 100,000. Now, for me, if it's a long-term investment, and I've done my research, meaning that the code reviews, looked at the fundamentals and everything, and it makes sense, I'm willing to put in 5% of my portfolio, meaning that 5,000 out of 100,000. That's what works for me. Anybody could have other ways of doing it, but you want to make sure there's a system to how you're investing and trading. You don't want to just willy-nilly get into these projects, right? So for me, that 5% is based on projects that have great code, right? So a Token Metrics code review score over 80%, low market cap, ideally. So market cap, ideally under 10 million, but sometimes it's not always the case, right? But I'll say in general, something that has potential for 10x, right? So basically potential for 10x, it could be $10 million market cap that goes to 100 million, or sometimes it could be $100 million market cap that goes to $1 billion. But basically something that has 10x potential with good code, I'm willing to put 5% of my portfolio into it. And then I also look at other factors such as, is there staking? Are there ways for me to earn yield, right? So staking, yield farming, liquidity pools. So if I can get all three, that's the holy grail, right? Sometimes it won't be quite perfect, right? But as I mentioned with Emma, right? $26 million market cap. Like this to me is textbook, right? Very low market cap. And there is competition that's already carved out a niche for this market, right? Nexus Mutual shows us that, okay, this insurance thing in DeFi matters. Nexus Mutual has market cap of 450 million, almost $500 million market cap. And this project, the technology is good as well. Maybe not quite on that level. I think Nexus Mutual's code review score is like a high 80 or low 90. This one is in the low 80s. So I'm not saying this can displace Nexus Mutual, but I think if there are 3 winners in the insurance and covers space in DeFi, I think Nexus Mutual, I think this could be one of those 3. Right? So I'm saying basically, can this project be a top 3 project in its niche? right? And I think yes, based on the code review and the valuation. So I think this has 10x potential. So I think this can go to $10, right? And I put 5% into that, right? So now I have 95% ETH, 5% in that altcoin. And I keep on doing this until my ETH amount goes down, right? So like 2 weeks ago, my ETH was 90% of my portfolio. Now it's down to like 55% of my portfolio, right? Because I've been making lots of investments in these projects that I think are undervalued with 10x growth potential, right? So as I mentioned, AMR, Tornado Cash, Idle Finance, Benchmark Protocol, Opium, even though that one had a higher market cap. And then once I have those in my portfolio, all of them, also at LDO, I'm looking now on how I can earn yield. I'm basically now doubling down. It's basically free money, right? So I take those tokens, and even with that, right? As mentioned, you don't want to just put. So let's say, going back with example of AMR, right? Let's say I took 50 grand, right? Or let's keep things simple, even though we know that the gas fees, portfolio of 100 grand, I take 5 grand, put that into AMR. Now I go on the site and I see they also have yield farming where they pay you 280% APY. I say, you know what? That's amazing ROI. So I go and I stake that because you have to first add what you have. So the pairs they had were ETH and Armor. I already have Armor. I already have ETH. But you don't want to stake all your Armor because if you stake everything to farm it and you get hacked, you're back to zero, right? You want to live to play again. So I take that 5,000 and I do a quarter of that, 25% of that. And I put that onto the liquidity pool on Uniswap through their site. They give me an LP token. I take that back to their Armor site and I stake that and I earn that APY, right? So recap, first question you ask, are you a trader? Are you trading or investing? If you're trading, 1% of your portfolio is the max I would do, right? If you're investing, the max I would do for an altcoin is 5% of my portfolio, but I have to make sure that it has 10x potential. It has a good code review, meaning that when the music stops and a bear market comes, this project will bounce back, right? This project is not dead, right? This is how you find good projects. And then I would also look at the liquidity, right? I've covered this before. So this is why I like 1inch Exchange the most, because it keeps things very, very simple. So let's go back to 1inch. So I just come in here, right? Let's say I was doing ETH, right? And I was buying MR, right? I come in here, I do everything using my ledger, right? They calculate the slippage for you, right? I try to make sure that the slippage ideally is less than 5%, right? I'll say 5% max, right? On occasion, maybe I might FOMO and do something under 10, between 5 and 10%. If it's a project that just launched and price discovery is tough, for example, with Tornado Cash, I think I did hit 10% on slippage. But that one I knew long-term was going to do well, right? But ideally, this is easy, right? So come here. So let's say you're a whale, right? 12% slippage, that's high, right? So basically you want to put in a number and make sure that there is no slippage, right? So ideally 5% max slippage, but ideally less than that. Basically that's it, right? So you don't want to have high slippage because even here, anything over 10%, they warn you, right? So that's how you mitigate it. So for example, with Idle Finance, I didn't get a chance to buy 5% of my portfolio because the slippage when I was getting in was just high, right? So I actually ended up getting less. I think it was 3 or 4% of my portfolio based on the slippage, right? But that's how I try to mitigate risk, right? Because there are all kinds of risks, right? You have liquidity risk here, right? Meaning that let's say you do everything right, but after a while you get rug pulled, right? That's why in the last 1 year or so, I've not been rug pulled. I mean, I've not been trading much, but the only projects that would rug pull me per se were just private sales that didn't launch on exchanges, right? Or there's no liquidity. But in general, if you're getting into a project on exchanges, you want to make sure it's liquid, right? So that's why using 1H exchange, I like it here. I mean, Uniswap also does show you the calculations as well. But for me, I like this because this has smart order routing. So you get a better price. Now, one thing, actually, a pro tip, I just kind of actually discovered this. So for me, I've been going for maximum return, right? And the fees are pretty high, right? So let's say you do like 35 ETH, right? About 62 grand worth, right? The fees you're paying on this are 200 bucks. But if let's say you want something lower, you can just do lowest gas cost, which would give you less in fees, but it will take longer to fill, right? So you might not get the best price per se, right? That's kind of something you have to kind of balance out depending on. So I would say if you have lower amounts, like let's say you're putting in like, I don't know, 1 ETH, right? You're putting in, right? So the fees on that are basically 50 bucks. But you could buy this, but staking would definitely be a lot more expensive, I believe. But don't quote me on that. But yeah, so just to kind of recap, you have to manage liquidity risk. You have to manage project risk, right? Risk in the sense of finding projects with good code, right? That's why we have Token Metrics code reviews for our customers. And then making sure the project has growth potential, right? Not quite risk, but I would just say potential for growth, right? And is the project undervalued? That's how I would do it.